Hello, folks. Welcome to Pro Trader Strategies Market Commentary or Spot the Trade for Monday, August the 16th. My name's Eric Wilkinson, and we've got a few things to go over here. Before we do that, though, right over there at the bottom there, we got a subscribe button. Click on that so that you guys get notifications with that little bell, because I will pop unannounced every once in a while and talk about option strategies that I find to implement based on what's happening in the markets at any given time. Yes, we are scheduled at 8:30 Pacific, 11:30 Eastern every single day. That's where I'm going to try and talk about spotting the trade, economic data, things like that. But later on in the afternoon, I might have to pop in here to make sure you guys are clear of concept and or find a new trade. So smash the like button, comment throughout the video. If you guys want me to look at something, please comment over there. I'll make sure that I will keep an eye on that over there for you. Now, let's talk about a couple of things with this manufacturing sector that we've been seeing going on here in the United States and across the pond. Overnight, we got industrial production numbers coming out of China. Now, usually I don't like to look at China's economic data points. Why? Because they usually pump them up a little bit and they come out better than expected. But recently we've been seeing these numbers come in a little bit lower. Maybe they're not building all these ghost cities and stuff like that that they use to drive up their GDP and manufacturing numbers and things of that nature. Earlier, past couple of decades, we're not necessarily seeing that go on right now. So industrial production coming in at 6.4%, expected to be 7.9%. Retail sales missing massively at 8.5%, expected to be 10.9%, and the unemployment rate slightly upticking. That's all out of China. Now we start moving over here to the United States, and we got our Empire manufacturing number coming in at 18, expected to be 28. So another big miss on that number as well. We've been seeing some of these manufacturing numbers here in the United States. Remember the National Federation of Independent Businesses, that's a small business index that we saw earlier on, and that's the lowest number we've seen in the last 10 years, came in at like 70. So if small businesses aren't confident, we aren't seeing this manufacturing and we're not seeing this retail sales, you guys, folks, this is a pretty good sign that the economy is slowing. So with that said, we are seeing some weakness in the markets across the board, but NASDAQ was leading the charge to the downside. Energy was seeing some struggles here earlier today, though we're starting to climb a little bit back. Is it more of a flight to safety as people are pulling their money out of equities and throwing it towards some of the safe haven aspects? That might very well be the case here. As we can see, gold continues to climb, looking to try and pierce that 1800 handle again. Now, you've heard me talking for quite some time. That 18 handle, I think, is the sweet spot for gold that I think we're going to climb back up there and retest that area. Now, Bitcoin is off a little bit on the day. No real news out of this as of right now. I think more people are concerned with the major markets, with the equities, the bonds, and things like that. We've got bonds moving higher today, and this is despite that we're hearing real mixed bag out of the FOMC. It depends on who is speaking at any given time as to what they think is going to happen with rates, which really leads it a little bit even more cloudy, to be quite honest. We're hearing now that September could be where we start talking about the talk of easing the asset purchases. Okay, so we're not talking about raising interest rates at this time. We're just talking about slowing asset purchases from the FOMC. Now, remember, when we're talking about buying assets, they are buying really bonds here, which suppresses interest rates or holds them at lower levels, as long as they can. Now, when they start slowing that asset purchase, that means that the bonds should start down ticking, right? Well, if bonds start down ticking, that means interest rates start up ticking. Those are the levers and pulleys of the bonds there. All right, VIX is moving higher here, and that was with the NASDAQ down 1% on the day, over 150 points off the lows, but still, I've talked about this for the last week when we were grinding higher, actually for the last couple of weeks. The risk, folks, is to the downside here. And something we used to say on the floor is that, get them while you can, not while you need them. And that really applies and very applicable to buying protection in options. When people aren't thinking there's anything going on, that's actually the time to start adding protection, buying puts, say, because those prices are really cheap. Now, if you wait till you get that move happen, we're going to see volatility spike, those prices go higher. And that's what we say, that's when you need them. And we want to try and get ahead of this before you get to the point where you are needing and panicking, because then mechanical trading starts really breaking down. So stay ahead of the game, get them while you can, not while you need them. All right. Dow Jones Industrial Average here off about 60 points, well off their lows. Now the reopen trade is probably going to work if we're starting to see some shutdowns. As a matter of fact, something I wanted to talk about with the supply chain here that I forgot. In China, one of the third major exporter is shut down because of a single case of COVID. It's been shut down for like 6 days. Well, here in the United States, where we are getting some of those cargo ships coming into port, LA has streamlined that process. We've talked about this during COVID, how a lot of these companies have done massive streamlining of their processes in order to increase overall margins and get rid of some of that fat. We've talked about that with the casinos, Caesars. Well, we're seeing that here with the shipping ports. Okay, so they are actually offloading at about a 20% rate higher than what they have seen in the past years. So their production increasing, they're streamlining that process. The problem is now that the storage areas for these containers being shipped to the United States are building up, and because of our infrastructure not getting those tankers and things of that nature, the cargo ships off of those ports. All right, so those are starting to stack up, and those ports are at capacity now. And something to know with that, now that we have all of this stuff here, all of the supplies, the problem is we're not shipping it out to the rest of the United States because 30% of the truckers aren't showing up. So we're pulling all of the materials in faster, but we are shipping them out slower because of our infrastructure, and these folks aren't showing up. There's trains stuck in Chicago that aren't coming out. It's all kinds of crazy things happening there with the supply chain issue that just doesn't seem to end, folks. All right, so we've got the Dow Jones moving a little bit higher here off the lows anyway of the day, which was created during the morning hours. And we got the mini S&Ps in negative territory. Again, charts looking like topping patterns. We blow this up and we can see confirmation there. Dow Jones, not so much. It's looking a little bit more of building up for a continuation pattern there as we get counter opposing dojis. We got a 3 dojis right here in a row showing a bit of a top. Now, I think if we see some late day weakness here in the Dow Jones, that's going to signal further weakness the rest of this week. So a close near those lows or near this value area high right here where my pointer is, near those lows of the day. That's going to be that confirmation people are looking for a rollover in the equities. Let's look at the breakdown of the mini S&Ps overnight week. I'm not surprised with the data coming out of China showing weakness. We've already seen the weakness coming out of the European region, some signs of that. Now China here in the United States not looking so great. You aren't seeing this chart here on the Dow. Sorry, why isn't it showing it? Let me share. Is it showing now? There we go. Thank you. Sometimes I get chatty and I start forgetting about that. So here we can see overnight weakness in the equities with the E-mini S&Ps starting to get a little bit of a bounce here, but overnight you can see that weakness was filtering into the markets because of that China economic data that we got overnight, and then a continuation with pretty crummy economic data here in the United States. We've got the port closed down, the third largest shipping port out of China closed down. That's going to cause more supply chain. That's been closed down for 3 days. They still haven't opened it. So that's going to continue to snowball here in the United States. Now let's look at the Dow Jones Industrial Average again real quick, because I did want to pull this out that we are looking like we're getting a little bit of a topping pattern in the E-mini S&Ps that's zoomed in there. So if we take a look at the Dow Jones here, now this could be really hard to read if I flatten it out too much. Now, one would say that we get this hangman doji at the top. Now we got basically a tombstone doji and another hang top doji. Folks, that's really hard to read. One person might say that that's a top. Another person say that we could be setting up for a continuation. Still no confirmation whatsoever on this chart. Looks a little bit fuzzy. So I would have to talk about this being closer to 35,100, 35,200, let's call it. That would be a confirmation if we close out somewhere around that area on the markets. And then we can go back and look at the gold futures. Gold futures making a little bit of a move here. I think that's more of a flight to safety. Dollar continues to strengthen, so that should cause a little bit of weakness with gold, but we're not seeing that. More a flight to safety from the equities, I think, holding up the the gold futures there on the markets. Now let's talk about a couple of trades that I'm taking a look at for my portfolio. On Friday, I talked about I had a couple of these orders working, was trying to get out of them. My son had his wisdom teeth pulled, so I just had some working orders in there. The only thing that I actually got was gold. I'll talk about that in a minute, but today I was covering my XLE, which was in the August, and I had sold the 52 calls in there, if you guys remember, on the 22nd of last month, so right around in here. So market just continued sideways here. We had that high volatility, which I talk about. Well, when we have high volatility and a market neutral assumption or a bearish assumption here, I was expecting the energy sector to show a little bit more weakness, but because it was right there at the point of control in this market, that I decided, if anything, we could just easily see this market just continue to settle down around the point of control. And that's what we look for, because that's where the time and volume has been spent for this underlying. So anybody that has exchanged hands with this underlying for the past 52 weeks really is looking at 48, 49, that trade, 48, 49, hoping for maybe a 50 hold on. Well, those folks are really complacent. If you're short here, you really aren't too worried because it's trading right here where you've just been seeing it trade forever. And if you're long, you really have no angst because it's just not going anywhere anyway. Now, remember, when you go to extremes, the highs and lows or things of that nature, the people that are long are wanting to cover and the people that are short are wanting to cover. But when you are trading at this point of control, it usually has a time to settle down. So when we're getting involved in this trade with this high volatility in and around this area, I'm looking for it to start settling down. That's exactly what's happened here in XLE on selling 52 calls in there. Originally for 43 cents. I bought them back this morning for 3 cents. So market just trading sideways. I was expecting the market to come off a little bit more here across the board in the energy sector. We really just didn't see that. It really settled down right here at the point of control, which was something in the back of my head I would be looking for in a trade like this. So we got this market moving sideways. Volatility coming out quickly, and I didn't get the directional move right. Well, maybe a little bit today selling calls, and I got a little bit of a down move here today. But at the real thing that made this trade work out was that volatility crush coming out and all of the premium coming out of this underlying with it trading sideways. So directionality, we don't always have to nail that one, but as long as we are setting these strategies up for success, the only way we can do that is in the interim when we are setting these up, folks. You can't do it afterwards. It's a little too late then. Again, back to the get them while you can, not while you need them. And then the other one that I was talking about with gold, I got clicked on one of these on Friday, and that was on the August. I was short the 158 puts in there. I originally sold those for 55 cents. I was able to get out of those on Friday for a nickel while I was at the dentist. But this morning, I was able to get out of the August 161 puts in there. I did those both on the same day. I think I did that on the 9th of the last month. So we got this bottoming pattern here. I got the move to the upside, which is what we're looking for when we are trying to sell some puts. These were like cash secured puts. I talked about these in an IRA and or in a trading account to be able to capture it at or near those lows. Because remember, I'm selling 158 puts in there. Those 158 puts are right down here at this Fibonacci, right? So we would expect to see a little bit of support. Now, remember, when I'm selling 158 puts, I lowered my overall cost basis by 55 cents on that trade. Now I'm in the 161 puts in there that I sell for $1.20 on the same day here. Got the market moving, a little bit of volatility coming out. This one, both things worked in my favor, right? I got the direction moving in my favor because I sold some puts. I want that to move higher because I have negative deltas there. That makes those prices go down quickly as the market moves higher. And I got the volatility coming out. Now, if every percentage point volatility comes out, those premiums go out, which is what I'm looking for. All of the levers and pulleys are helping me out here. And because I went into the August that expire in a couple of weeks, theta is also right there in my back pocket, just kind of picking away at all those premiums. So with this said, on Friday, like just a little bit of review in the August, I sold actually on the 9th of August, I sold August 9th, I should say. August 9th, I sold the August 158 puts in there originally for 45 cents, I think, or was it 43 cents? I bought them back for 3 cents. I think it was 43 cents, actually, folks. So I got a collected credit of 43 cents. I had to pay a debit to get out of 3 cents. Total win of 40 cents on that one. And then today, selling the 161 puts, and I did those for $1.20, and I bought those back for, let's call it a nickel right offhand, just to make sure that I'm at least being safe with that. On the 161 puts, I bought those back for 8 cents. Sorry, 8 cents on the 161 puts this morning. So out of both of the GLD and the XLE, this one I had on 2 trades. I started this one out. It was like a 16 delta and around a 34 delta. So right in line with my rules for this trade. I got a little bit more aggressive, folks, on those 34 puts there, but I wanted to do a little dollar cost averaging if this market really pushed down, because I got in slightly earlier than waiting for a confirmation, which I suggest anybody newer to trading, especially on swing trades, wait for that confirmation unless you are a trader with a higher risk tolerance. Maybe you're coming from the futures and starting to trade some options, then maybe you don't necessarily wait for that confirmation so much because you have a higher risk tolerance. But other than that, GLD, XLE, I'm out. I haven't added anything at this point. I want to see how today shakes out to really get a good feel of how I think the market's going to react this week going forward with some of these equities. Could be back to that close-up trade where we're going to start seeing the NASDAQ with the weakness today, start seeing some strength later on this week. We'll have to see for that. That's all I got, folks. Like I said, please hit the subscribe button, and there's a bell to get you a notification if we pop in here unannounced. Smash the like button before you go, and any comments, I'll reach out a little bit later on this afternoon and make sure everybody is clear a concept, or if anybody else has any questions, wants me to cover something for you. All right, so that's all I got for you. Other than if you can't take that, take it easy. Bye for now. What's that? I've got my screens trying to show up. I can't see your charts. Still no charts? You got the charts at the end there, right, Sean? It looks like it's showing it. All right, Sean, I don't know what happened there. Folks, I'm sorry about that. Should I go back? Does anybody want me to go back over those trades there real quick? I didn't get the allow. All right, I'll stick around for a couple minutes here. So the XLE basically selling the, I'll just do this review on the XLE real quick because that was the trade. The gold trade, since we got it up here, we'll do the gold trade. So basically here on the 9th of the month, I went in and sold the August 158 puts for 43 cents. And I got a credit for that. So think about if you're selling the 158 puts, what I'm saying there is I'm willing to buy GLD at 158. Now I get to keep that credit no matter what happens. Okay. So that lowers my overall cost basis, right? So if I were to, when you sell a put, that means you have the obligation if it goes down there, or if the buyer of that option says, hey, I want you to take my stock at that price, it means you have to buy it there. All right. So I would see that go over into my account at 158, but I get to keep that 43 cents. All right. Which is basically $43. Lowers my overall cost basis on this trade by 43 cents. So my break even on this particular one would be 158.57. And then I also on the same day sold the August 161 puts, and therefore $1.20 credit. And I was able to buy those back for 8 cents this morning. So both of those really the directionality worked in my favor, but also helping me was that volatility coming out. So I've got directionality. The market moves in my direction. I sold some puts. So as the market goes higher, those put values go down, right? And as volatility comes out, for every percent that volatility comes out, so when we're talking about a level here, so it goes from 20 to 15, which is now, it lost 5 percentage points. Well, when you're looking over there at the option montage, then that volatility or vega tells you how much those premiums will go down for every 1 percentage point. Well, I've lost 5 percentage points on those, so that probably equated to at least like 10 cents. I don't know right off the top of my head what the vega coefficient was for the August 158 puts right now offhand, but I can assure you that that number became dramatic with that volatility coming out and the direction moving, right? And why did I pick the August versus something else? It's because I wanted theta to be in my back pocket to come out and pick those premiums. Because remember, every day every day theta comes and takes premiums away from you. And the closer and closer to expiration we get, volatility gets even more aggressive. And then the other thing I wanted to talk about with XLE was we got involved in this trade in and around this area, market, really high volatility, right? That means those premiums are expensive. When we have high volatility, that tells us how expensive those premiums are. We just know they're expensive. I don't care what the price is exactly for them. I just know that they are at some of the highest levels we've seen in the last 52 weeks. That tells me I need to start looking to sell options, right? Well, with this one, XLE, I was looking for a possible up move here in XLE, but the mainstay of this trade was the fact that I was looking at this extreme high volatility and a possible point of control, because this is where I was talking about when I didn't have the chart up, folks, sorry, that the point of control is where the most time and volume has been traded. That's where it's transacted hands. And when that happens over and over, people get used to seeing that price. So despite the fact that you might be short lower or long higher at this level, maybe you got long way up here or something like that. Well, when it's trading at this level at around 48, 49 area, people are used to seeing that price. So I might be long at 56 or the high, but when it settles down at this level, I'm going to be a little bit more comfortable. So the market has a tendency to slow its momentum around points of control. And that's exactly what we did. I got a little bit of a move to the upside with me on this trade, but for the most part, I was selling the August in here, 52 calls in there. So selling 52 calls, I collected 43 cents and was able to buy those back this morning for 3 cents on that. So because it was really just kind of trading in and around that point of control, the volatility really coming out, market didn't really move. So I didn't get my direction that I thought was going to happen. But because it stayed here at the point of control and that volatility came out when I jumped into it, all of those levers and pulleys worked in my favor, despite the fact that I couldn't read the chart on this one. So that's the beauty in trading options, is you don't have to exactly have the right timing and the perfect directional move after you put this trade on. With something like options, we can get involved in this, still make money when we have a brain fart and really just don't pick the right directional move. So that's where I'm going to try and stick around and play that game. All right. That's all. Sorry about the screen. I'm trying to get better with that sharing thing. So that's it. I'll see you guys all tomorrow. And if you can't take that, take it easy. Thanks, Sal. I do appreciate you keeping me on point. Appreciate it. Thanks, man.